In his view, there's a very close linkage between climate change and the circular economy. Hamish Chamberlayne, he's head of Global Sustainable Equities at Janus Henderson Investors. Hamish, what's your approach towards sustainable investing?
So we define our investment framework with environmental and social factors. So right at the very outset, there is this intentionality to how we invest. We're looking at these big environmental and social issues that are pressuring the global economy. They've got very significant investment implications, we believe. And we're looking to create an investment universe with reference to those environmental and social issues. So at the foundation of our investment approach, our investment philosophy is this recognition that we have big environmental issues such as climate change and resource constraints, big social issues such as aging demographics, growing populations that are putting the global economy under enormous pressure. And obviously from those big environmental and social megatrends, there are a multitude of different environmental and social factors within our societies and within our economies. And we recognize that they're all interlinked. It's a sort of complex, interdependent system. And we're ultimately seeking alignment because we believe that companies that are making goods or services that are of benefit to the development of a sustainable global economy with reference to these environmental and social issues are more likely to have the investment characteristics that we're looking for. So we're looking to construct a high differentiated, high conviction, but diversified global equity portfolio of companies with goods and services that are aligned with sustainability issues, aligned with doing positive environmental or social impact.
Let's go into the details there. You mentioned the close link between the circular economy and the climate change. So it's not only about climate change as such.
So yes, there is this really close link between climate change and the circular economy. Ultimately, climate change is an issue of resource constraints, but we've mentioned it separately because of its importance. So our climate system is part of our natural capital, and its value is not appropriately recognized in our current economic system. It's an issue. Climate change is an issue that's arisen from our linear economic model. And that linear economic model is one of extraction and depletion, of making and using, and then throwing away and polluting. And so we're extracting fossil fuels, which are a finite resource. We use them, we burn them, and then we throw away the emissions when we've used them. So we're polluting. And it's altering our climate system, is really depleting an extremely important part of our natural capital. So in order to mitigate climate change, we need to move away from this linear sort of system of extracting and producing our energy. We need to sort of move to a circular way of getting energy from our natural resources and using energy. And that's where renewable energy comes in. So that's where we see this link between climate change and the circular economy. But it does go a bit further than that because it's also completely integrated in how we behave and the types of goods that we make and use, how we make them, how we use them, how we then treat those goods once we've stopped using them. And all of these are linked back to how we're claiming or using our natural resources.
So let's talk companies, let's talk investing as well. Can you mention a few good examples where you see this link?
Absolutely. And just leading on from that last point I made, I think it's a really important point to make that solving climate change is not just about investing in renewable energy and removing fossil fuels from your portfolios or from the economy. After several hundred years of a fossil-driven, sort of economic society, the fossil economy is a highly complex system with lots of interdependencies. It's like a very complex web of interactions that touches all aspects of our lives. And so we have to look for solutions in many different parts of the economy. It's not just about where we get our energy or power from. It's how we use our energy and how we behave ultimately. So how do we get around? What are our methods of transportation? And beyond that, the need for physical movement. How do we communicate? How do we live so that the buildings we live in, the buildings we work in, the consumer goods that we purchase and how have they been made, or in where do they come from. So we always make this point that to really think about solving climate change as an issue, we have to look at all these different parts of the economy and look for solutions in many different areas. And just to highlight some of those solutions, we think design is a really, really critical issue. So we have an important investment in a design software company called Autodesk, but really sustainability starts with design. We have to design sustainable consumer goods that can be recycled. We have to design low carbon infrastructure and buildings, or energy efficient buildings. And then we look at the actual building technology itself. Schneider Electric is one of the world's leading producers of technology that is there to improve the energy efficiency of buildings and industrial processes. Then we can move on to the technology sector. And I think the technology sector has got such an important role to play here. We see a very close link between what we call the DED nexus, so digitalization, electrification, and decarbonization. And big picture, ultimately, we've got to move from this analog fossil economy to this digital electric economy. And the technology sector is going to play such an important role in that. And we've got many different types of investment in this sector. I think I'd like to share a really incredible statistic because I think a lot of people's perception of the IT sector is that it's very energy intensive. And yet we're looking for companies that are having an incredibly positive role in reducing that energy intensity and also moving to low carbon forms of computing. And the statistic that I'd like to share with you is that over the last 10 years, internet traffic has gone up by more than a factor of 10. So a more than 10-fold increase in internet traffic. And yet energy consumption by data centers has remained flat, which I think is incredible. And so you can look at companies like NVIDIA, which are making these incredibly efficient GPU processing units that go into data centers and improve the energy efficiency of data centers.
Let's stick to the investment part of it. What about the performance goals? I mean, something that investors are always keen on talking about.
Absolutely. So we do produce a lot of reporting on the sustainability metrics in our fund, and we produce an annual report that really looks at several different areas. I think with sustainability, there are many different angles you can approach the measurement of sustainability and impact from. With regards to our investments, we're very focused on revenues. So we're looking for at least 50% threshold in terms of a company's revenues contributing to one of our 10 sustainable investment themes. So that's how we define our sustainable investment objective and how we define the companies that we're looking for. We're looking for that revenue alignment with one of our sustainable objectives. We produce comprehensive reporting against the sustainable development goals, looking at how companies are contributing to those. And then on the subject of climate, we actually produce a TCFD report. That's a task force for climate-related financial disclosures. And there are many different ways of analyzing climate risk in relation to your investments. And that's what that TCFD report looks at. So it's not just about carbon footprint, but it's also looking about how your portfolio is aligned to different climate scenarios and how well, insulated or resilient you're going to be in the event of different climate scenarios. And what I can share with you is that we do have a very, very low carbon portfolio that's very well aligned with a below 2 degree future.
Sticking to the investors, how hard is it to convince them?
So I think one of the things that perhaps is complex and sometimes confusing for investors is that there's so many different approaches to investing with regards to sustainability, and that makes sense because sustainability is a very broad field, and I think it's really amply illustrated by the fact that there are 17 sustainable development goals with, I think it's something like 169 individual targets that cover a huge range of different environmental and social issues. And so ultimately there's enormous breadth to sustainability, and there's room for many different types of investment strategy. You can have narrow investment strategies, and you can have broader investment strategies that look at a number of different sustainability factors. However, there is one thing that is sort of common, or I should say 3 things that are in common amongst all sustainability strategies. And we call it ITC, so intentionality, transparency, and consistency, ITC. And really, if you're going to convince people of your sustainability investment approach, first of all, you have to be intentional about how you invest. You have to have clear objectives. You have to be completely transparent about your investment framework. And then you have to be very, very consistent in how you deliver against your objectives and transparent in the reporting. So that's how we convince our investors, is that we have that transparency about what we're doing and how we do it and the results. And obviously that's all linked back into delivering strong investment returns. And we have this fundamental belief and conviction that there is this incredible alignment between thinking about big sustainability issues and generating strong investment performance.